Celsius is down 18%. So I'm going to explain exactly what's going on, why it's happening, and then also if Celsius is a buy or a sell at this price. So if you can, please give me a like and subscribe. I appreciate it. Their earnings came out. They released their earnings, and I'm going to break this down as simple as I can. And then I also have an interview at the end. It's under 2 minutes, and the CEO, he explains everything that's going on as well. So hopefully with all of this together, it paints a clear picture for you. So revenue up 50%, but the cost of revenue was up 61%. Now this is not looking at just the second quarter compared to last second quarter. This is looking at the 6 months, the first half of this year and compared to the first half of last year. I like to do that because it gives me a bigger viewpoint of what's going on with the company. So the income from operations was only up 10%, but if you take away the distributor termination fees, for some reason it's very hard to say for me, distributor termination fees, if you take that away, that was $85 million that they spent, it's actually up 54%. Okay, so keep that in mind. The net income that was to the stockholders was only up 1%, but if you take away those distributor termination fees, it's 68%. Right? And then the earnings per share, the EPS, was down 2%. So those distributor fees are really hurting. But there's also one thing, and this is what sent everyone in a frenzy. Celsius brand retail sales decreased 2% year over year for the 13-week period ending in June 28th. Right? They're saying that in this quarter, the Celsius brand sold 2% less than the second quarter of last year. That is freaking everybody out. I'm going to explain exactly what's going on though, and then at the end you're probably not going to be freaked out. But let's just look at who exactly Celsius is first, right? Because we have to understand that they are a top dog in the industry. This is ranking the companies in the beverage space, and they are sixth. Right? They are sixth with how much they're bringing in under Coke, Pepsi, KDP, Red Bull, and Monster, right? So we're going to compare Red Bull and Monster because those are energy drinks. Now, it's obviously sorted by how much you're bringing in sales, so of course they're less than that. But their sales change year over year. They're increasing this number by 58 cents, well over their two competitors, right? So they're going to keep getting closer and closer, right? In terms of bringing the retail sales in. And then their contribution to the first half of this industry's growth, they have 12%. The only one is Coke. After that, no one's close, right? They're 20% above Monster. They're almost, that's like 40% above Red Bull. Like that's over 50%. What am I saying? No, that's like 60%, 70% over. So, I mean, they're growing faster than Red Bull and Monster, okay? So the thing that hurt, again, distributor termination fees, 80 million this quarter, 85 million total in the first half. That is killing them. It took away 22 cents off their EPS. They reported 77, but it could have been 99, right? So those termination fees are killing them. So in their key messages, they delivered double-digit Q2 revenue growth, which is true, yes, great, but it was partially offset by portfolio optimization within the Celsius brand. They did a lot of restructuring, bringing in Alani Nu, bringing in Rockstar. They've had a lot of logistics and moving pieces that they kind of, in order to do one thing, they gave up on something a little bit, right? To give, you got to get, you got to give kind of thing, and that's what they did. So Celsius was the sacrifice in a way because they were bringing in these new brands, figuring it all out. And so they were strengthening the assortment, productivity, and execution. So now they can drive the sustainable growth for brand Celsius. So you have to understand that, yes, this was a bad quarter, but this was kind of part of their plan. It just was not timed out correctly, and the CEO will explain. This is the market share. If you can see, Celsius is still catching up. They are closing this gap. This is Red Bull, Monster, and then this is Celsius. They are catching up, right? So, I think Red Bull keeps, their pace and their market share has kept more steady, where Monster is the one that's losing a lot of market share to Celsius. Now, in the last quarter of in the second quarter of 2025, this was their revenue, right? Whatever number that is, it's 100%. That's what their revenue was. So this year, the second quarter of 2026, it was 12% less than last year. That's another one too. Their revenue was 12% less than last year. Remember, I showed you on the earnings the first half, not the second quarter versus last year's second quarter. So when you did actually look at that, you would see that they had 12% revenue less in Celsius. So what happened? You have scanner growth, contra, orders versus scan, non-RTD energy, international. All these numbers affected their revenue. They were down 7% in all this, but that can be kind of confusing. So I had AI simplify all this, right? The scanner growth, which was down 2%, is the sales at the checkout registers, right? Where customers are buying it. That slowed down about 2%. Then you have the biggest drop, the contra, which is 3%. That's just promotions that they spend on discounts, getting the money, getting the cans and everything on the shelves. So that was, getting the shelf space, all that. So orders versus scans, that's the biggest drop. It means that retailers and distributors did not order as much new product from Celsius compared to what customers actually bought. So this actually happens when stores decide to clear out existing backstock inventory, which is inventory rebalancing, rather than buying new inventory. The CEO will go over this. The way that they handled their flavors and everything, they were sacrificing Celsius, and so the distributors and retailers knew this, and so instead of ordering from Celsius, they just said, hey, we're going to take out from all of our stock that we have instead of ordering more. The positive factor was international, of course, up 2%, but that's not what anyone is focused on right now. So in short, Celsius revenue dropped by 12%, primarily because the distributors bought less inventory to clear out their back stock, and the company spent more money on discounts and promotions, and then also their income, which is their profits, and their earnings per share was down on top of that with the distributor termination fees. So you got all of this happening, right? But what's going to happen in the future? What are they doing? And then so I have this clip of the CEO, and so you can listen to it. It's under 2 minutes. I cut it so you get all the good stuff. Check it out.
We understand the second quarter was challenging for Celsius, and we understand the concern of investors. We made some strategic decisions with the Celsius portfolio in the beginning of the year. We optimized the portfolio, reducing the lower turning SKUs to put more focus on the faster, higher turning SKUs to build out more national distribution and presence. Unfortunately, the timing of that didn't come to fruition. The lower turning SKUs moved out of the system faster before the resets took place, and you're seeing that really materialize in the second quarter. Unfortunately, Celsius took the brunt of the impact, but we have great innovation plans in 27 and beyond, and we shouldn't have cut the tail as deep as we did on the lower turning SKUs. We could have optimized a little less, but there's a lot of strategies at hold there, and we're going through that process of rationalizing, optimizing the SKUs. We had Alani coming in as of over $1 billion brand, and Rockstar coming into the system. Now that the integration is done, it's on us to continue to capitalize on the movement that's in place. Healthy, better for you energy is not going away. More females are coming into the category than ever before, and our portfolio captures that, and we're getting really exciting conversations with retailers as we're planning for 27. Some of the innovation was delayed on the Celsius portfolio, as that was our main portfolio, but we had Alani coming in and Rockstar coming in, and there's a lot of disruption. When you're taking $1 billion brand from a third-party distributor network and bringing it on the PepsiCo systems, there's an end into the key account systems, and when your sales organization, supply chain, and finance, there is a lot of moving parts on that. We made strategic decisions in the beginning of the year to simplify the Celsius portfolio for this moment of time, to get a bigger foundation of faster turning SKUs, which we can capitalize on and continue to grow from here on out and into 27.
All right, so I guess at the end of all this, right, it's should you buy or sell Celsius? Now, I would definitely not want to sell when something is selling off like this already. It is really dropping. I believe in this company. I do believe in Celsius. I believe in the future. I believe in the company. As you can see, one thing is they're taking it on the chin. They're saying, yeah, the timing didn't work out, but at the same time, we knew we had to deal with a lot. We had a lot to do, and in order to do that, we stepped away a little bit from Celsius. We took a step back to really get everybody together, right? Rockstar, Alani Nu, Celsius. Let's just get everyone together first. Let's create a foundation, and now we can grow, right? They were planting the seeds. They were in the pot. They were getting all this stuff, right? But now it can grow, right? You got to get the right pot, the right soil, the seeds. You want to get you might need a stick or eventually, whatever it is that you got, but you want to make sure you got the right stuff and the foundation to grow first. And I think that that's what they're doing in the management team. I think they're going to grow significantly from here. I cannot see this thing going into the teens. I mean, if this hits 19, I right now, because I am definitely down. I'm down about 40% on about 30% on this. And if I were even, if I had broke even on this, if this goes back to that price, this thing would completely be the most heavily weighted stock in my portfolio. So that's why I'm like, I really don't want to do it. But there's a part of me that wants, I might have to buy some more. I did buy 5 shares or something, because again, I only put in $50 a week, and there's a couple times where I'm going to put in a little bit extra, and I put 250, and I was like, okay, I think Celsius might continue to drop, so I bought a little bit. I bought $125. I bought something like that, and now I'm just like, this is crazy. I might have to buy more, but anyway, that's all the information that we got right now. That's where Celsius is headed, and basically from here, I mean, the problem is there's no momentum, right? The stock has no momentum. Let's look at the stock, right? So here's the stock, and you could have bought it in 2021. That's 5 years ago for the same price. Now, it had a lot of momentum going up, right? Now, it did catch a little break right there, but then it started going back up. Then after this, it just completely crashed, which rightfully so, going through the Pepsi and all that distribution change. I actually bought around here. I bought around here in another portfolio that I have a lot more that I'm just like kicking myself on right now. Well, not kicking myself, but I literally bought here at the bottom. I want to start putting in some right now. I'm just not sure, but yeah, I got here, and then look, it was going well, and then there's no momentum though. There's no momentum right now. All the momentum's going down. That's the momentum. It's just going down. There's nothing going up. So, what can change that? What's going to change the trajectory of the stock? That's the hard thing, right? What is going to make it change? Now, it's possible that Celsius kind of bounces around this level, mid-20s, like from 20 to 27 for the next few months until they release new earnings, right? I mean, that's actually very possible. I could see that happening, which would suck for me, but it is what it is. I'm not going to sell. I just don't know if I want to put in any more. But again, the stock, I feel like is going to eventually, it's going to come back up here. The way that they're growing, I mean, let's look at Monster. Right? That's Monster. Right here. Actually, let's do this. Let's do, is that Monster? Yeah, Monster. And Red Bull, I think, is private. So look, this is since 2021, July, those last 5 years. Now they've finally, look, Monster has not performed nearly as well as Celsius. At the same time, depending on when you bought Celsius, the Monster's has been on a steady move up. Fairly, I mean, obviously, right here, May 23. Yeah, it had some hiccups, right? It's been having some hiccups, but it's at the end, it's gone up more than Celsius, a lot more than Celsius. It's gone up 97% compared to 7%. So, but yet Celsius is growing way faster than Monster and Red Bull, right? They make a lot less money, but just because the stock price and your growth of stock price isn't about the revenue, like how much in total you're making, it should be about growth and your market cap. So anyway, just all I'm saying is I'm starting to confuse myself on how, I mean, I understand that investors don't like to see that Celsius went down. I do like to hear the CEO say, look, we got a lot going on and there's only so much we can do. We didn't want to try to we couldn't do everything, and so we decided to focus and make our foundation the priority and making sure we were bringing in these two big companies and we create something that's sustainable and grows very well. So I like that. I like that they're focused, that they have a plan. But will they execute it? What's going to happen? So anyway, thank you for watching. I really appreciate it. I'm not going to tell you to buy. I'm not going to tell you to buy it, but I would definitely not sell it unless you want a tax loss harvest kind of thing, maybe. But yeah, I do think eventually this thing is going to be $100 eventually. But dang, this hurts. This hurts, but whatever. I'm holding diamond hands. No, I'm just kidding. All right. Anyway, thank you for watching, and never forget to earn it, save it, invest it. Buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.